Everyone's watching AI explode, but do you know what hedge funds are actually buying? We dug into Q1 data and found 8 stocks that are quietly dominating the AI space. From chipmakers to biotech to beauty tech, yes, beauty. These companies are solving billion-dollar problems and flying under Wall Street's radar. Let's start with one that's grown 300% while barely making headlines. Perfect Corporation, ticker PERF. This isn't your typical AI stock. Perfect Corp is using artificial intelligence and augmented reality to revolutionize how we interact with skincare and cosmetics. Their award-winning real-time skin analysis tool uses AI trained on over 70,000 medical-grade images. It can instantly detect fine lines, acne, oiliness, and even dryness, then offer customized skincare recommendations. They've also built AI-powered virtual try-ons for makeup, hairstyles, eyewear, and fashion accessories. Retailers love it, customers love it. Engagement goes up, conversions go up, and so does investor interest. 10 hedge funds now hold a stake in the company. What sets them apart? Perfect Corp leads the AI personalization movement in beauty retail, offering tech that bridges the gap between e-commerce and real-world experiences. Would you use AI to analyze your skin? Now let's pivot from cosmetics to critical infrastructure. Lantronix, ticker LTRX. Lantronix delivers industrial IoT and edge AI solutions, and they just landed a major multi-year contract with a top US mobile carrier. Their tech is now being used to monitor over 50,000 backup power systems at wireless cell towers. Using their Fox Series Edge gateways and Perception cloud platform, Lantronix enables real-time tracking of fuel levels, battery health, and more. It reduces manual inspections, cuts operational costs, and improves reliability across nationwide networks. 13 hedge funds are backing the company. Why does this matter? Lantronix is becoming the backbone of smart infrastructure, using edge AI to keep telecom and energy systems running efficiently, especially when it counts. From power grids to predictive insights, let's talk about decision intelligence. BigBear.ai, ticker BBAI. BigBear.ai develops AI-powered analytics tools for organizations that need fast, data-driven decisions. They've recently expanded operations into the UAE through a strategic partnership focused on digital transformation in mobility, logistics, and infrastructure. BigBear.ai will lead the AI integration and localization process, helping governments and corporations implement practical, scalable AI tools. 17 hedge funds now hold positions in BigBear.ai. Here's where they shine. Their focus is on complex environments, defense, government, logistics, where accurate decisions and fast analysis can't wait. Would you trust AI to guide decisions in national security or supply chain management? Now, let's step into the biotech space. Recursion Pharmaceuticals, ticker RXRX. Recursion is using AI and high-performance computing to reimagine how drugs are discovered. They recently launched an open-source AI model called Boltz-2, developed alongside MIT. It predicts molecular structure and drug-binding interactions up to 1,000 times faster than traditional simulations. This all runs on Recursion's BioHive 2 supercomputer, powered by more than 500 NVIDIA H100 GPUs. That's industrial-scale computing applied directly to medicine. 19 hedge funds are on board. What makes them different? They're pioneering industrialized drug discovery, using proprietary AI models and supercomputing power to reduce time, cost, and failure in early-stage drug development. What if the next life-saving treatment is found by an algorithm? Let's stay in healthcare for the next one, but with a different angle. Tempus AI, ticker TEM. Tempus is using AI to bring precision medicine to the masses. Their CARE program, developed by subsidiary Ambry Genetics, was recently validated in a peer-reviewed study as 99.5% accurate at identifying hereditary cancer risk based on clinical guidelines. This is huge. Millions carry cancer-related mutations and don't know it. Tempus simplifies the process of genetic testing by using AI to scan, interpret, and flag high-risk patients for preventive care. 21 hedge funds are invested in Tempus AI. Why it stands out? Tempus turns overwhelming genetic data into real, actionable insights, bringing personalized healthcare within reach for more patients and providers. Would you take a genetic test if AI told you it was time? Now, from healthcare innovation to national defense, C3.ai, ticker AI. C3.ai builds enterprise-scale AI platforms, and they've just secured a $13 million task order from the US Air Force. This will expand their predictive maintenance system, called Panda, to even more aircraft platforms. The tech helps predict failures before they happen, boosting readiness and cutting maintenance costs. It's all part of a broader $450 million deal that extends through 2029. 24 hedge funds are backing C3.ai. Their standout quality? They're one of the few companies trusted by the US military to deliver mission-critical AI, and they've got the track record to prove it. Would you invest in the AI that keeps fighter jets in the air? Now we venture into the next frontier of computing itself. IonQ, ticker IONQ. IonQ is leading the charge in quantum computing, and they just achieved a major scientific breakthrough. Using their Fort Enterprise quantum system, they simulated a rare physics event, neutrinoless double beta decay. This could help explain the universe's imbalance between matter and antimatter. They did it with 32 operational qubits and more than 2,000 quantum gates, making this one of the most advanced public quantum computing applications to date. 28 hedge funds are on board. So, what makes them a standout? IonQ is one of the only publicly traded companies advancing commercial quantum computing at a level that's redefining what's scientifically possible. Would you bet on quantum technology to lead the next computing revolution? And finally, we end with the most popular AI stock among hedge funds right now, Upstart Holdings, ticker UPST. Upstart is changing the lending game using AI. Instead of relying solely on FICO scores, their platform analyzes hundreds of variables to assess creditworthiness, helping lenders approve more people, more accurately, and at better rates. More than 90% of the loans facilitated through Upstart are fully automated. Their recent deal with Cobalt Credit Union expands their reach in personal loans, HELOCs, and auto refinancing. 33 hedge funds are holding UPST. Their competitive advantage? They're leading the AI-powered lending revolution, offering financial institutions automation, efficiency, and smarter risk assessment. Would you trust AI to approve your next loan? Among the 8 AI stocks we covered, Upstart Holdings leads the pack with the highest gross margin at 97.05%, showing just how scalable and profitable AI-driven lending can be. Despite its negative earnings per share of minus $0.75, it's a high-margin, high-potential business, even if it's not yet profitable on paper. Perfect Corp stands out with a positive EPS of $0.07 and a solid gross margin of 77.87%, despite being one of the smaller players with a market cap of just $241 million. That kind of profitability at an early stage could hint at strong operational efficiency and upside potential. On the flip side, Recursion Pharmaceuticals and Tempus AI, both active in biotech and healthcare, are burning cash. Recursion has a negative margin of negative 37.97% and EPS of negative 1.78, while Tempus reports a larger revenue of $693 million, but still carries an EPS of negative 4.60. That's common in R&D heavy sectors, where upfront costs are high, but future returns could be exponential, especially if their platforms gain clinical traction. IonQ, despite having a market cap of $12 billion, only reports $43 million in revenue and a tiny gross margin of 0.69%. That highlights how much investors are betting on future breakthroughs in quantum computing, not today's earnings. C3.ai, a more mature player with a $4 billion market cap, posts a respectable 60.62% gross margin, but still remains unprofitable, with an EPS of negative 2.23. It's a reminder that even established enterprise AI companies are still scaling toward profitability. Lantronix, with its $160 million revenue and a modest $118 million market cap, seems undervalued on paper. Its gross margin is 36.91%, and while it has a negative EPS, its partnerships and expanding use case in Edge AI suggest it's one to watch in the infrastructure space. And finally, BigBear.ai, with a $2 billion market cap, runs at a 28.54% gross margin and negative 0.77 EPS, positioning it squarely in the middle of the pack, showing solid revenue, but still climbing the ladder toward profitability. Let's wrap it up with a quick recap. AI is no longer just for tech companies. It's shaping how we treat diseases, power networks, prevent military failures, and even apply for credit. These 8 companies are leveraging artificial intelligence in very different ways, and hedge funds are paying attention. So now the question is, which one caught your eye? Let's see in the comments which stock is the true winner. And here are 8 undervalued stocks to buy now. Click on this video here